Thanks, Keith. Good morning, ladies and gentlemen. Look, I've been asked this morning to speak about trends in global beef markets, what's happening in global beef markets. And I'm going to do this on the sort of twist of the hamburger principle. I mean, under the hamburger principle, you're supposed to sandwich some bad news in between two pieces of good news. I'm going to sandwich good news in between two pieces of bad news, but in fact most of my speech will be concentrating on the good news. But I thought that it was important to sort of begin the speech by just noting the struggle that farmers go through. And I mean, farming has always been a difficult game, and I don't suppose the good news that I'm going to announce is going to change that. Of course, we have challenges with seasons, good and bad, both with their own particular challenges. We have challenges with ever-increasing costs. Farm costs have gone up by about 50% over the last decade. And we've got challenges with the vagaries of cattle prices. And you can see cattle prices bounce up and down like a yo-yo, really. I mean, this is a graph over the last decade or 13 years. And you can see during that time they've fluctuated around about 100% between their low points and their high points. So that in itself provides an enormous challenge to our cattle producers. And of course, this year things have been even more difficult than they have been over the past few years. For a start, prices are lower. Cattle prices are probably around about 30 to 40 cents per kg's dressed weight below what they were at this time last year. And those lower prices have been driven, gee, this is sensitive. Can we just go back one again? These lower prices have been, oh, sorry, I've skipped the slide. These lower prices have been driven by increases in supply. I mean, supply in May was around about, slaughter in May was around about 800,000 head. And you've got to go back to the 1970s, the late 1970s, to get a slaughter number of the equivalent slaughter number in May. So that just shows you the amount of cattle coming forward. And of course, processors are having a field day with those cattle coming forward, and that's causing prices to sink over the course of this year. So that's some bad news. I think the positive is that worldwide demand for meat is very solid and has in fact risen over the last decade. The FAO, the Food and Agricultural Organization of the United Nations, publish a meat index, and this meat index has gone up about 80% since the year 2000. And our export prices have also risen strongly when measured in US currency. I mean, a major rider on that statement. Our export prices have risen strongly when measured in US currency. And in fact, manufacturing beef prices, for instance, the United States, have doubled since the year 2000 when measured in US currency. But of course, the Australian dollar has washed a lot of those improvements away. Another positive, I think, is that grass-fed beef demand has risen more strongly than beef demand generally. Of course, Australia, unlike the United States, is a grass-fed beef producer. Round about 80% of our exports are grass-fed beef, only 20% are grain-fed beef. Of course, we do have a feedlot sector in Australia. It accounts for about a third of our slaughter. But in fact, our feedlot sector, in terms of average days on feed, has been in decline. I mean, now we calculate that cattle spend, even when they go in feedlots, they spend less than 100 days on feed. It's about 94 days on average that they spend on feed. That's going down. We used to have a significant mid-fed cattle sector. That's almost vanished. For export markets, we tend to be only feeding for 100 to 120 days. For the domestic market, it's of course far less than that. So even when cattle go on into feedlots, they spend the vast majority of their life on grass. And of course, most cattle don't go into feedlots. They just go straight from grass into export markets, or to a lesser extent, the domestic market. I said the demand for grass-fed beef was growing more strongly than for beef generally, and demand for grass-fed beef has been positively affected by trends both in developed markets and developing markets. In developed markets, there's a trend towards more natural food, a definite trend in developed markets towards more natural food that as researchers you need to be aware of. I mean, we can see it, of course, in Coles' decision to buy meat that isn't treated with hormonal growth promotants. We see it in the pink slime controversy in the United States. Now, there's a process in the United States called lean fine textured beef that involved taking fatty beef and through various processes extracting the fat out of the beef and providing very lean product from fatty product. Hamburger manufacturers such as McDonald's and Burger King were using this product. We see this trend to natural beef. I mean, I'm fortunate enough to travel the world quite often, and I visit supermarkets wherever I travel. This is a picture of a supermarket in Canada, a natural beef offering. This is a picture of a supermarket in the United States, a natural beef offering. And of course, we have the same trend here in Australia. In eggs, over 40% of purchases of eggs now are free-range eggs. In sour stalls, with Coles' decision to ban the use or not to buy pork from producers who use sour stalls, and also in beef, there's a trend towards natural beef products. And nowhere is that trend more apparent than in the United States. And really, Whole Foods, a supermarket chain in the United States, has made a real business out of an offering of natural products. I mean, this supermarket chain was nothing, was virtually non-existent back in 1990. It's now, Whole Foods is now a Fortune 500 company, all based on the back of a natural offering. Look, it's very, very difficult to get solid information about the amount of organic and natural product being sold. These are some statistics from Australia and the United States, which indicates the trend is increasing towards natural purchases of natural and organic product. But it's probably still pretty small. I mean, the best figures that I can get is around about 3 to 4% of beef in the United States, perhaps even a little less than that, is organic and natural beef. But 3 to 4% of 12 million tonnes is still a lot of product. And they're our exporters, and there's certain of our exporters that are definitely trying to tap into this market. And of course, the Cattle Council recently made this announcement of Australian Pasture-Fed certified standards, which provides a guarantee that the beef sold under these standards has spent 100% of its lifetime pasture-fed. It also provides an eating quality guarantee, because people not only want to feel good from eating natural product, but they wanted to eat well as well. I mean, you know, they want their cake and eat it as well. So, you know, this move by the Cattle Council is definitely trying to tap into this natural product trend. So, what does this mean for you as researchers? Well, I think, and as producers to a degree as well, I think there's two things it means. I mean, firstly, there's obviously opportunities for some producers in these supplying these natural and organic markets. But also, I think it means that we've got to be careful about how we approach our production systems. I said that there's probably only 2 to 4% of the US market that's organic and natural in terms of beef, but there's a much greater interest in the provenance of the food and how it's produced. And so we've just got to be ever more conscious of that as an industry. I mean, we've seen what happens with the pink slime issue in the United States. Headlines in US papers over those production practices, even though they'd been ticked off years ago by the USDA as being safe. We've seen it in Australia with the outrage over the live cattle trade to Indonesia and some of the practices that they're using. So it's just something that we've definitely got to be conscious of as an industry and shape our production practices around what we're comfortable as explaining to the community in general. So that's a trend in developed markets, but a much more significant trend, of course, is what's happening in developing markets. Look, I've shown this slide a couple of times, and some of you might have seen it, so those that have seen it, don't answer this next question. But I'm just interested, would anyone care to guess what city in the world this is? Well, it's a city in China. Looks a lot like New York, doesn't it? If those of you that have seen pictures of New York, you'd think, boy, this looks pretty close to New York. It's a city in China called Chongqing. Has anybody heard of that city? It's a city of 30 million people. 30 million people. It's got an average income currently of about $3,500 US a year. So the per capita income in Chongqing is about $3,500 US a year. But incomes in Chongqing are growing at about 10% a year. So, you know, in 7 years, the 3,500 will become 7,000. In another 7 years, the 7,000 will become 14,000 if that growth rate continues. I mean, these are the markets that are now starting to tap into beef in the developing world. And just to provide a further picture of what's happening in the developing world, I thought that I'd show you this slide. It's a slide that I've been using for the past 18 months or so. And you can see, it's quite a complicated slide. You can see on the y-axis, there's life expectancy measured in years. So life expectancy of the citizens in various countries measured in years. On the x-axis is income per person, and that's on a log scale. It just was convenient for me to put it on a log scale to squeeze all the data in, but you ought to note that that's on a log scale. Now you can see that I start this chart in 1840. Now, boy, I'm glad I wasn't alive in 1840, because you can see, even in the United States and the United Kingdom, the average life expectancy was only about 40 to 45 years. And in India, you went through all the trauma of your teenage years only to die shortly afterwards. I mean, the other thing to note is that, yeah, there were some differences in income in the 1840s, but they weren't tremendous differences. I mean, incomes, as you can see in the United States and the United Kingdom, were about three to four times greater than they were in China. So some differences in income, but not tremendous differences in income. But let's roll this slide forward and let's go through the years. And you can see through the 1800s to the early 1900s, incomes in the United States and life expectancy gradually increased. This World War I, you can see that impact of World War I. Look at World War II, particularly Japan. Boy, a huge impact that World War II had. And I'm going to stop this chart in 1975. Now you can see in 1975, China under Mao Zedong had made tremendous strides in improving life expectancy. I mean, life expectancy in China in 1975 was 60 years. He'd done a fantastic job of increasing life expectancy, but he'd done a lousy job of improving incomes. And you can see that the disparity in incomes between China and the United States, rather than being 3 to 4 times, as it was in the early 1800s, is now 20 to 25 times a difference between China and the United States. But again, if I roll this forward, you can see how quickly China has caught up or is catching up. And in fact, you can divide various cities in China out from that major bubble, and you can see that Shanghai is getting fairly close to income levels in the United States. So what happens when incomes change? Well, a number of things happen. Purchasing patterns change. Purchasing patterns change from wet markets to supermarkets. And of course, supermarkets is a lot easier for imported countries to supply. And of course, as incomes increase, so does meat consumption. I mean, this is a chart showing all countries, or a number of countries across the world. You can see that there's a reasonably strong correlation. It's about 0.4, 0.5 correlation between meat consumption and income levels across various countries in the world. So meat consumption, beef consumption in China now is about 4.3 kgs per capita, compared to over 30 in Australia. And you've got to think that as incomes increase in China, those beef consumption levels will increase. The other thing about these developing countries is that they've got very different population structures to developed countries. This is a population pyramid in Indonesia. And in Indonesia, over 50% of the population is under 30 years of age. Compare that with the population structure in Japan, you can see how different it is. I mean, the age of Japanese consumers versus the Indonesian community, a completely different population structure in two countries. That will mean that the population in these developing countries will continue to grow, and also young people in these countries are switched on to supermarket buying, they're switched on to Western habits, they're much more inclined to go into McDonald's and so on. So it's positive for our industry. And you can see that this is just not theoretical concepts that I'm talking about. This is demand for beef imports throughout the Southeast Asia, China regions, and they've gone up fivefold over the last 20 years. But we've got to think about the sort of product that these people are eating. So yes, their demand is increasing, but their consumption patterns for meat are very, very different from consumption patterns that we're used to. I mean, we'll sit down at at an evening meal and tend to have a steak. Well, that's very unusual. It's a rarity in Asia. In Asia, there's much more thin slice cooking, there's much more wet cooking, stews and things like that. And of course, that means that they don't need the marbling in product, they don't need the quality of product that a Western consumer needs when eating an evening meal of steak. I guess, you know, this demand from Asia is bringing about a remarkable change in our exports. You know, 92% of our exports used to end up in Japan, Korea and the United States. 8% went to other countries. Now over 30% are going outside those major three markets. And you've probably all heard about what China's done this year. I mean, we're going to send about 100,000 tonnes of beef to China this year. And you look at the beef that we're sending to China, it's mainly those secondary cuts. So it's shin shank, it's briskets, it's silver side, it's manufacturing, all used in wet and thinly sliced cooking in China. The other thing that this trend of increased demand from developing markets is doing is bringing back about a remarkable change in global beef trading patterns. Now, when I first came into this industry, there were 3 beef world trading zones, quite separate, quite distinct zones. The first trading zone was the European Union. Of course, that was distinct and separate because it was fortress Europe. You know, you had to have atomic weapons to get into Europe. So mighty were their barriers and their tariffs and quotas. The second trading zone was the Atlantic Basin. The major supplying countries in the Atlantic Basin were the South American countries, and the major demanding countries, the importing countries, were Russia, the Middle East, and parts of Asia. And the third trading zone was the zone that we were in, the Pacific Basin. It was protected by FMD. The major supplying countries were FMD-free countries, Australia, the United States, to a less extent Canada and New Zealand. The major importing countries insisted on only getting beef from FMD-free countries, Japan, Korea, the United States. That arrangement was very convenient to us. It was convenient to us for 2 reasons. One, in terms of overall beef import demand, those Pacific Basin markets demanded more beef than other markets in the world. So Japan, Korea, the United States, Mexico, basically beef imports into those countries were higher than the rest of the world combined. And secondly, the growth in those imports was higher than the rest of the world combined. And so it was convenient because those markets were high and growing, and it was also convenient because there were price premiums in those markets, significant price premiums of 20 to 25% for the beef that we were selling into those markets. But that's now all changing. Over the last 10 years, import demand in the Pacific Basin has gone down. We all know what's happened with Japan, and that's a major reason for the downward slide in imports into the Pacific Basin. while imports in the rest of the world have increased. So that's a very significant change in world beef markets, and significant to us because we're now competing in markets against South American beef and against Indian beef. India is now the major exporter in the world. We used to be the major exporter in the world. India is exporting about 1.7 million tonnes. We export about 1.4 million tonnes. And you can see how livestock cattle prices in Brazil and Australia used to be far apart because they were selling into the substandard markets. Now, livestock prices in Brazil and Australia are almost equivalent, and that's because we're competing in the same markets that they're competing in. We're competing in these Southeast Asian markets, we're competing in Russia, we're competing in the Middle East, because it's those developing markets where the beef demand is coming from. So, to the final part of my address, how to make a difference in world beef markets. That was what the question that I was asked to answer. I couldn't help thinking, if I was a producer, I wouldn't give a stuff about making a difference. All I want is to make some money. But I think I gotta talk a little bit about both these things. I think more than ever, driving costs of production lower is by far the most important thing that producers could do. I mean, as I said, we're now in a different world. We're in a world that we're in more direct competition with South American producers in particular, to a lesser extent Indian beef. And under those circumstances, it's incredibly important to get a grip on costs of production and to drive those lower. We all know that there's enormous differences in costs of production. These are some differences in Northern Australia between the top 20% and the average producer. There's about a 30% difference in costs of production on average. It's just important for the average producer to drive his production costs down to where the top 20% sit. I guess it's not only about cost of production though, in terms of dollars per kilogram of meat produced. It's about meeting standards, it's about meeting specifications in terms of carcass weight, in terms of fat depth, in terms of age, in terms of meat colour, and so on. And you can see the costs that we've calculated to the processing sector from out-of-spec carcass weights, out-of-spec fat depths, out-of-spec meat colour, and so on. And of course, if they're costs to the processing sector, they're costs to the producing sector, because these costs are passed back. I think the second thing second piece of advice in terms of making a difference is that we need to take care that we're proud of our production practices. And you're willing to explain anything about the way that cattle raised and beef produced over a dinner table with a member of the community. I think that that's becoming more important than ever. More important in developed markets. It doesn't matter stuff in developing markets. They're not onto this game yet. But we sell into both developed markets and developing markets. And that's a critical feature for developed markets. And finally, it's about matching production systems with consumer demand segments. And, you know, it used to be that beef was beef and we just sell it as one amorphous mass. But, you know, nowadays there's markets within markets within markets within markets. I mean, the beef market is more fragmented than ever before. These are some marketing claims made by our processors in the United States, you can see grass-fed, grain-fed, Wagyu, halal, organic, natural, free range. The list is almost endless in terms of marketing claims. And so for producers, it's about working out their costs of production under each of those systems and matching their cost of production to these segments of consumer demand. Thank you.